So my name is Pramita Saha, and I'm the Director of Student and Alumni Engagement at the recently relaunched Investment Management Center at UNC Kenan-Flager. So the IM Center is focused on three main pillars: investment management, ESG, and DEI.
Pramita, I see your hand is raised.
Yeah, sure. So I wanted to ask a little bit about ESG.
No, God! No, God, please, no!
In my intro, I mentioned how ESG is one of the key pillars for our center here. And I'm curious to hear your thoughts on a few things. One, I think ESG means different things to different people. So how do you define ESG? And do you incorporate it in your investment process?
Yeah, I'm not sure you're going to like my answer, but I think that it's a complicated area and we get to kind of some strange results. So for example, I think in some list I saw they included Exxon and they excluded Tesla. So I'm kind of scratching my head about that one. Basically, I think that we definitely want to look for businesses that are good for the ecosystem. But there are also businesses which, if you look at a company like Exxon, it's an very essential business for us to have the kind of quality of life and such that we desire. We just can't banish every fossil fuel producing company and say that life will still be great. Now, we have a choice whether we invest in those or not, and that's fine. So I do look at how companies conduct themselves and how the choices they make, but I don't overdose on it. So for example, I think this is our oldest investment. We've had this investment for about 8.5 years. It's a company actually got plants all over the world that provides inputs to the aluminum industry. And the stuff they produce that is used by the aluminum industry to produce aluminum has a lot of discharge of gases and such, and it's just part of the process. The company has actually gone well beyond what is required by law in terms of reductions in emissions and so on. And they put in scrubbers and so on that cost them several $1 million a year that their competitors don't do. And they carry that cost. So if you just took a glance at that company or that industry and you were overdosed on ESG, you would just take a pass. But I think when you peel the onion, if you will, then things look a little bit different. I don't take the approach that I have to not invest in certain industries at all because of ESG. I just look at it kind of one more layer deeper in terms of what type of corporate citizens are we talking about.
Actually, that's great. I love your answer. You said I wouldn't like it, but that's exactly what we're trying to do here. Basically dig a little bit deeper to incorporate it into the analysis. So thank you so much for that.
Okay.
Love, you have your hand raised?
Yep. Hey, Cameron, nice to meet you. And thanks, Pramita, for organizing it. Mohnish, big fan of yours and have read the Dhandho Investor. So my question was more so, I guess, I wanted to ask on the psychological side, when you do have, like, let's say you start an investment in a certain position and things don't necessarily go to plan. What are sort of criteria that you're thinking of internally as you evaluate whether or not to stick with it or whether to double down? And maybe the second question would be is where are you going fishing these days, I guess? Thanks.
Yeah, so actually one of the rules and I would say laws of the universe is everything I buy goes down in price. And so I'm just resigned to the reality that it'll be going up till I buy it and then it proceeds to start going down, especially after I've taken a full position. So yeah, I think it's very common in my portfolio that we'll have positions that recent positions that we've taken and we have some loss on them. And sometimes even a meaningful loss on them. I think that's just kind of par for the course. And the reality with the investment business is that John Templeton said that the best investment analyst is going to be wrong 1 out of 3 times. They're only going to be right 2 out of 3 times. more than likely, it's more going to be wrong about half the time. And the good news of this business is that even with a 50% error rate, you can do extremely well above market returns and such. So we don't want to be using the stock price to instruct us. We should be using the stock price to serve us. And what should be instructing us is the fundamentals of the business. And to the extent that something declines in price and we still have caused some dry powder to make it a full position, it would not be the price that would drive that decision. It would be more about what are the fundamentals, that has something fundamental changed, and that sort of thing. We want to pay attention to all the data. If something's gone through a price decline, we want to understand why that is the case and whether there is some long-term secular issue that we need to pay attention to. But if it is, something temporary or whatever, then for the most part, I'll ignore it. And in terms of places to go fishing, place that I found most productive last few years to go fishing in is in Turkey, and 85% annual inflation, and everyone and their brother having exited the market in terms of foreign investors, and local investors really having a very short holding period. So the Turkish market is interesting because 80% of the entire market cap of Turkey is either held by insiders or foreign institutional investors. And that portion hardly trade. The 20% that is held by Turkish retail and Turkish institutions turns over every 9 days. And so that's hyperactive. And in most cases, retail investors in Turkey, they want to invest at 10 o'clock in the morning and make about 10% and exit at 2 p.m. And so Buffett says the stock market is a mechanism to transfer wealth from the active to the inactive.
If you watched the video all the way to the end, thank you so much for watching. As always, if you have any questions, please leave a comment down below. And if you want to see the best portfolio tracker out there, then stay tuned for the quick spiel at the end of the video. So that's it for this video. Thank you so much for watching, and I hope to see you guys back in the next one. Hey guys, do you track your portfolio manually in an Excel spreadsheet? If so, you can avoid so much hassle by signing up to ShareSite for free. ShareSite is the portfolio tracking tool that I use to track all my investments. And unlike most brokerages, ShareSite automatically tracks everything, including capital gains, dividends, and also currency gains if you invest in foreign markets. It's also completely free to sign up to ShareSite, and you can use it for as long as you like. And if you sign up to a paid plan, then use my referral below, sharesite.com/investingiq, and you'll get 4 months for free when you sign up to an annual plan. So what are you waiting for? Go check out ShareSite.